Hello, today is the 12th day of March, 2013. It's a Tuesday. My name's Derek. Welcome to this morning's quick silver update. Only two charts today. One is going to be a blast from the past from about 2.5 years ago, and the final one will be the current daily chart. So let's get it started. And looking back at a chart from November the 9th, 2010, at some point on the 1800-hour time frame UTC. And at this time, silver was trading at about 29 and a third. Pretty much exactly what's going on right now with the silver price. So it's went flat in 2.5 years, with it having several breaks higher and tiny breaks lower than this level within this time frame. Now, people then were saying it's way, way, way oversold. It's got to pierce back. And they were saying it here. They were saying it here. They were saying it here as well. At least some people were. And then it finally did it. It came down to 25 before obviously breaking up to the 50 level a little bit later. But it's interesting because of what you have seen that you experience the thought or action to it being way overbought because you were in a nice little uptrend and it's just going way too high. Now when we're looking at 29 and change, it's in a major downtrend and way too low. So it's just interesting to say the least. As far as bull markets are concerned, you can see that's what they're supposed to do, stay above 18 average band like that. When you have retracements, generally speaking, when you finally break resistance, it's not a surprise to have something like that occur. Also, when you look at this, this is 22 hours, so it's pretty much a daily chart. 5 days in here to go from 24 to 29, that's a gain of over 5. And you need 240 for 10% at that point, which is a gain of about 22% in about 5 days, which is interestingly enough. So these things can, when they want to go, they will really go, is basically what I'm trying to point out. Let's look on to today's chart. Now, yesterday's chart contained very small errors. It had one day not on there. That was this one in here, which was Friday's day. So therefore, that problem was fixed when I looked at the data today, and it was an outside period because this high was larger than the previous high, and it was also larger than the previous 4 or 5 highs. This low was larger than the previous low. It was also, or lower, I should say. It was also lower than the 3 days previous lows in here. And then it followed yesterday with an inside period. The outside period usually means that the big moves are about to take place. When you see that it closes in an upper motion like that, and there's more of a line on the downside and there's an upside, that's usually fairly bullish. And today, of course, we've broken that high, making highs not seen, going back to this red candle down here. And the volume, well, yesterday it was microscopically tiny. Today, the massive volume is microscopically tiny. Now, what that means is we've had high volume today, but not as high as some other previous days in which the markets were going higher. Because during this entire run, there has been several days, and usually from around 8 a.m. New York time to between 11 to 12 p.m., 11 a.m. to 12 p.m. New York time, and it usually has brought in higher prices within that time frame. Now, the volatility moves have been microscopic, in my opinion, as well. But with that being said, we're seeing the volume picking up during this time frame, showing that there's a decent chance that a bull market is ready to take force. I would expect, as the move, if it's making patterns of higher highs and higher lows, for the volume to diminish during the bull market run, because usually high volume is notable on charts at turning points when markets are ready to turn over to the up or down side. Okay, so with that being said, we have this 18 average band, which is in the process right now of flattening out. Therefore, it really needs to hold above this 18 average of lows, stay above it for that to be the case. Because if it goes below there, it needs to go below the 18 average of lows for this thing to go back in a declining mode again. Therefore, the secret or the key that I look for is a decent break above this high, which would be at least to this line, if not even closer to 30, and then a pull back down to the band, or some sort of previous resistance, and then break established resistance. So something like that would be maybe a move up to 30 and then pull back, and then once you break established resistance, that's what I'm looking for a bull market to take place. And that, I think, will be everything for now. But I'm expecting again with this volume coming in the way it is. I'm thinking the reason for the volume is a lot of the commercial shorts unloading a lot of their short positions. Some of them probably for profits when they were shorting up in here, and then of course when they were shorting back in here, those ones would be unloaded right now for losses. Because I still think there's a lot of these shorts back in here before silver was even $20 an ounce. They still have yet to cover. I'm not sure, but that's what I'd be presuming. So thank you for tuning in.